All right, I want to go ahead and get started. Hope everyone's had a good weekend. And let's talk about the markets. Like always, there's a lot going on, a lot of news coming out in the last few hours. And headlines are driving the market, short term action. Long term view of the market is being driven by the dollar index as well as the crude oil prices. That's going to drive the long term view. The rest of the summer will trade based on oil, and it's going to and the U.S. dollar index. But short term, these headlines whiplash the market back and forth, and that's what we're seeing tonight. And it could reverse just as quick as it went down and is going down. With just another message from Trump saying everything's back on track, or Axios or whoever the mouthpiece is going to be. So I would just ignore the headlines. We can look at the markets and then take a look and see where we think everything is going. All right, so let's go to our live scene here. All right. Okay, so what I want to start out with right away in the futures, right now the Dow Jones made a lower low on the futures market right here. Okay, you had the first wave down, a, a reactive bounce, and now you made a lower low. So this sets up another swing lower, which is what it's in currently. And that could get this back down to 51,477 or lower, even as low as 50,918. Again, futures. So this should push this market lower. Okay, with this lower low, even if they do want to try to save it tomorrow morning, it will likely fail. So now we have this bearish week coming up. So I think early this week we're going to be bearish because it's going to have to finish this sequence. And that may also pressure the other indices down. And when they break these lows here and here, that will do the same thing. And they would challenge, obviously, the low before the MOU came into existence. Okay, so that's what's going on in the future. So I think you're going to see selling pressure in the futures, no matter how it chops around until this is resolved into the box at least. And then oil obviously is breaking out higher here, which is what we expected. So we look at oil in a four wave, and it still would be nice to see it make one more low. But I was showing members on our weekend update, I can easily just finish this count and call the whole cycle finished and truncate it, which would be a significant truncation, but it is allowed. Okay, it would be better, from a better symmetry to have this four bounce, even maybe go up to $81, and then perhaps uh, tensions ease again, and then it allows it to drop one more time. But what crude oil is telling us on the longer term cycle is that eventually either this conflict is going to come back and there'll be more, whether it be military action or more, uh, I guess, more of a more how can I say it, hostilities in the Strait of Hormuz to block the supply of oil, or there's just going to be a significant amount of supply that just is gone with increase in demand, whether there's peace or not. And one of those situations, or even both, will come into the picture soon. And since we're coming down and finishing this correction, it looks like a lot faster than what it looked like earlier. That means we may have, like I said, a summer of misery that we have to trade through, because the market is just, let's just face it, will not be able to accelerate higher if this move higher in crude takes place that I have shown here. Now, other sectors will benefit. Obviously, energy would rise, right? And some of these other sectors that were doing well during the initial shock of the war, those will continue to do well. The Ventura Globals, XLE, OIH, those are going to do great. But obviously, not everything's going to benefit. And so this is where we think it's going to go. I thought we would spend more time consolidating, and then this would come in the fall or post midterms, but it doesn't look like it looks like it's going to come sooner based on how fast the market's moving. And in fact, we may have already started it. Now, how do we know the crude oil cycle is now ended its downturn? We like to look at the daily RSI, and then we can just draw this trend line down. Basically, when you're on below this trend line, bad things are going to happen. Well, I'm sorry, good things happen with oil and the markets. But once you flip this and you come on to the other side here, the trend is now reversed, and now the downtrend is over, and you're in a new cycle higher. It was the same strategy we used to time the bottom here. The same idea, right? We did the same thing. I think we did it on the weekly cycle, but the daily would have done the same thing. See, you would have downtrend. We flip it right there. And right about there, you said, okay, right at 59, go long. We're in a new cycle higher. Boom. Okay. It's so simplistic, but it's so simplistic. People don't want to trust it because it's so simple. And it, I think, upsets people that spend a lot of time on charts because you can see it only takes a few minutes and anyone can do what I just did very quickly. And it's usually right. It's usually a good way to find when cycles end without all this complicated visuals and analysis that takes days and days to put together. I believe this was the weekly cycle we watched break out. This one here, right here, is I think where we said, oh man, we got to get long right here. That was right about 64. So I think we used the weekly. I think our group used the weekly. Now, the weekly would be the most, give you the most confidence that a major cycle has ended. And if we use the weekly here, I mean, we're right hugging, we're literally hugging that trend line. So it won't take much to flip the cycle. It's not going to take much of a pop here. And once that cycle flips, it's got a new weekly cycle higher, right? See that all the way down here. And then what's going to happen is oil is going to come all the way back up. This is going to come all the way back up. This move is going to happen. Perhaps we get to my target 200. Maybe it truncates. Who knows? And then you have that new dynamic comes into play. Growth in tech get hit hard. And then, of course, energy, agriculture, natural gas equivalent, energy transport, they're going to do well, just like we saw before. So on Thursday, that was a good idea to start to buy energy if you didn't have a position already, if you had opportunity to do that. Okay, there's always a bull market somewhere. So that's where we are. So now if this fork can end, right, the weekly cycle will still be in a downtrend and the daily cycle will still go lower. And then this move will happen. And then that will allow the markets probably to rally like they did through here, right? And that may allow the market to make more highs. And perhaps we have to consider we're already in 5, or we come back up in a B wave here, like we make a move here and go higher. And then we do something like this where you come back down and then you come back up and then you correct the whole thing later. So you see, this is the best case scenario I can think of in the market for the bulls right now, is something like this. On the headline indices, of course, obviously sectors would benefit more than the indices, and of course, the worst case scenario, I would say, is what I have here, where we come down and then maybe make one more high and then game over. Now, some people already think it's game over. Now I don't know about that. Now I think the market may need one more high, and this box should produce a reaction. And we talked about, since this could be a higher degree wave 4, it could go lower. So even this bounce could fail and then hit this target here at around 659, and then make this 5 later. And this could allow crude to make that move that I was showing earlier. It's just something to think about. And that's crude oil. Okay, so you have this dynamic. That's the dynamic of the market. But then there's another dynamic the market's trying to deal with, and that's the dollar from the hawkish Fed. Okay, we saw the strong jobs report. We traded in this trading range in the dollar. We all, our members, were watching this. And I said, whoever wins this battle is going to have control of the market. And sure enough, the jobs report happened. Boom. And then capitulation from the dollar bears. And once that happened, right, we saw gold and silver really tank, and the market start to change its character. Sectors breaking down that were resilient started to falter, like uranium and other industrial, like cyclical sectors. Then, of course, the MOU came, and that was great. And then the Fed meeting happened, and we're back in a in a strengthening dollar dynamic. So this is also impacting the market too. So you've got two forces, each influencing the market in the dynamic of the market. Okay, so that's what we have going on, and that's what the market's got to deal with. And of course, at some point, we expect the dollar to finish this cycle and then head back lower. So I think until this dollar cycle finishes, that's going to drive crude metals down, gold down, silver down, eventually all the cyclical sectors, as well as copper, as well as the uranium, uh, commodities in general will be under pressure, maybe except for oil, right? Because you have a second competing dynamic. So maybe not all the commodities get disrupted, but definitely the metals. Crypto gets hit here, and then of course when this finishes, the metals have a much, and crypto has a really good shot at a bigger rally. So this got to finish. So the Fed has to go from hawk to dove, and until that happens, this is going to add a whole new pressure to the market. Okay, and that's what's happening. So you got these competing dynamics right now in the market, oil and this, and then of course the semiconductors is the only thing holding up the market. It's the only thing that's keeping people long, and also structurally holding the market up. And it should really frighten you, some of these charts on the semiconductors. I mean, it really should. And again, we don't know when this is going to come to an end, but this is a chart of the SMH, guys. I mean, does this look like it's sustainable much longer? I mean, I don't know about you, but if I had a significant portion of my net worth in this sector, or even in the indice, which is mostly this sector, right? Mostly this sector. I believe I have here AI linked stocks now represent a record 45% of the S&P 500. Okay, so even if you think you own an index fund, 45% somehow are connected to this trade, direct or indirect, to this this group basket. So this won't go up forever. It never does. And when it corrects, it will correct violently, and it will happen overnight more than likely. And when it does overnight, you won't be able to get out. And that's just a risk. So I'm trying to be real with the risk, guys. This is, I mean, you can see this in front of you. If you don't recognize the risk, then it's a denial, because I mean, it can't just keep going like this. It just will, I mean, it can, but when it finally ends, we know you have no chart support until you get down to 238. Look, there's no chart support anywhere on here. So this will likely lose this whole pump will be gone, right? This whole pump will be gone. and will likely end up somewhere down either at 238 or maybe even as low as 135 when it's all said and done. What do you think if 45% of the index represents this? How's that gonna? That's a major bear market, guys. That's why I'm really afraid of what could happen. So there's a massive concentration risk, and you have that fact. That's another dynamic in this market, keeping it going. Okay, so as long as there's still money flowing in, and that theme is alive and doing well with Micron's earnings Wednesday, trying to push it higher. As long as no one, fumbles the football and that keeps going, yes, there will be a bid underneath this market, and it will just keep the dip. But once it ends, there'll be nothing else to hold the market up except for what? Energy stocks. Then good luck. If they're not, market cap's not big enough. Okay, so it's not gonna support the market. Okay, so that's the reason we're looking at the market in the way we are, right? That's the reason. Okay, so you have to make your own decisions here. It's your own money. I can't do it for you. It is unfortunate, we find each other at the end of a major cycle like we have now, but there's always a new bull market, right? We talked about that, and we can go to the XLE, right? So we have this catastrophe that's eventually going to happen in the market, but then there's another, but with one tragedy, there's a new opportunity, and the XLE is the new opportunity for this market. If you look at the XLE, again, I don't have it completely labeled, but you can see we have one wave and two waves down, right? So I'll go ahead and finish that here. Oops, I don't know what's going on here. Yeah. Okay, there, get rid of that. All right, so we have 1 and 2, right? And then we have this 1 and 2 here. 1 and 2. 1, 2, 1, 2. This was a massive consolidation. This was resistance that had gone on since 2008. So it was resistance that's been around for a little under 20 years. And we now broken through it decisively. And what may be happening now is the back test of the breakout right here. See, this is the back test of the breakout, right? And then look what do you think comes after a 20-year consolidation? Years of gains, years, probably decades of upside. This is the new bull market. This is the new bull market. Okay, right in front of you. But most investors aren't paying attention to that. They're paying attention to, Nvidia, Tesla. This is what needs to get your attention, guys. And this is what we look at as elite members. This is just a taste of what we always look at. We're looking at the future. We're not looking at the present. Okay, the present is, the pump has already happened. The move in the SMH is already coming on. Okay, we're looking at what's the next SMH? What's the next thing years from now? And this is telling me this is the next thing. So what is this telling you? Well, energy is going to be big. Well, does that mean, oh my gosh, oil is going to be expensive? It may be, maybe not. Maybe we have to refill all the stores that have been burned down. And it'll take years for countries to build back up their energy stores. And then they want to bring on more capacity because they don't want to be in this situation again, right? And then, of course, you have AI. What if the AI build out goes really well and you're going to need energy for AI and this growing economy? So maybe that's what this is saying. Or maybe it is saying there's going to be World War III in the Middle East and oil will be $500 a barrel, and these guys are going to be printing money. I don't know what it says, but but the chart, if you just look at it from ElliottWave's standpoint, says the best is yet to come. The SMH, likely the best is behind us. Okay, that's all I'm trying to say, guys. And so unfortunately, the concentration is not going to be able to carry the index. It just won't do it. And and maybe 15 or 20 years from now, we'll be talking about energy being 50% of the SPY and not semis anymore. I don't know. But right now, this is the market we have. So that's why we got to be careful. And yes, I know everyone's trying to get that last little bit here, but that's what the market does. I do think, though, again, even if we have a pullback, there's still one more high in the SMH. Okay, so but this 4 also could pull back uh, significantly. It could actually come back down to 435 and still make another high with divergence. Okay, so this could be a brutal sell-off here, and then we still get one more high. So anyway, that's kind of what we are looking at, and yeah, so we just trade what we see in front of us, and that's all I can say right now. I think oil, the short-term cycle on oil is telling you we either going to get this dip or it's already, or the bottom was in on Thursday, and that's it. And then we're going to start this spike, and when this spike finishes, then the indices will finish whatever pullback they, and this may be SPY 659 up here. We don't know. Again, we don't know where it will be, where the indices will be up here, but they obviously are going to be lower. I doubt they'll be higher. The XLE may be higher, but not the indices if this happens. Okay, that's what that, and again, Trump's hyper focused on oil prices because he knows you go into the summer and go into the elections with oil, it's political suicide. But he doesn't have much choice because what can he do about it? It's kind of too late, right? It's kind of too late where the paper and physical price is going to meet reality, right? The physical market is now starting to come into more focus. The paper market, which is more of an illusion, is starting to get nervous, right? Because it's going to have to repress properly, and you're not going to be able to get these ships through the Strait of Hormuz in a way that's fast enough to actually make a difference. Okay, now we've read and heard that the strait is open and everything's flowing. Then Iran said no, it's shut, and then Trump says it's open. So what is it? So let's go look at our website that we use, our tracker, and see what happened in the last 24 hours. Let me go to that real quick. All right, guys. So basically, oil, like I said, it's got to make this last low. If it does, then the market is technically can bottom. If it doesn't, then we just call it finished. So now the Strait of Hormuz tracker, all we saw there was basically there's no chain, right? We saw there's nothing flowing through right now, but the last 24 hours there was good flow through the Strait of Hormuz, and so there looks like some ships got through, but I think it's too late. I don't think you're able to recover. The demand for energy is going to be strong. You're going to see not just right the paper price eventually, meeting the reality of physical, which is going to happen in the next 4 weeks. We also have AI demand strong, supposedly still strong. And then we have the economy is somewhat resilient. Jobs are not going away. So we would assume the economy is resilient. And we also see that countries need to rebuild their energy stores. So even if there's peace, there's going to be demand for oil that could push prices higher until more capacity can come online. Now, the only other thing that can crash oil would be this demand destruction and a recession. And so, if there's any signs that AI is not, you slow down in capex, slow down in construction, or the price of oil has produced enough pressure on consumers and businesses where they are slowing down. I think at $77, you're not going to get demand destruction in that manner. So the only thing that can demand destroy oil will be either have been people forward purchased supplies and goods and chemicals, fertilizer that they didn't need, and now they don't need to buy it. And so you see a natural slowdown from that bring forward out of the fear of war. Or you're going to see Micron report and then perhaps give a warning that the build out is slowing down unexpectedly. If that's the case, if not, there really is no reason why oil should drop significantly, right? Unless you're in a recession already, and we don't think we are. The data hasn't shown that yet. Okay, the data hasn't shown that yet. So that supports all higher energy prices, right? And that's why when we look at the XLE, it's almost a win-win, right? It wins if the scenario is World War III in the Middle East and energy spikes, this sector wins. If it's a strong economy and the bulls are right and it's AI, utopia we're about to go into and everything's AI, this you need energy to build, this will win. If the consumer regains its footing and rates go down, energy will win. See, it's all energy leads. The only way energy doesn't win is in a deflationary cycle, recession, depression, and we don't have any signal or sign that any of that happening. So that's why I keep saying I'd rather be in energy for the future. And this move hasn't happened, and the SMH move is already behind it. And that's where the market is not looking, and most market participants are just looking at the short-term cycle. Always look at the long-term cycle. And SMH, like I said, should make a distribution top here, but this 4 could pull back as low as 433. All right. So anyway, that's all I want to say on the market tonight. Okay, guys, and I believe you should be able to hear me now. Can you guys let me know if you can hear me? If you can't hear me, I may have to just restart the live stream for some reason. Not sure. You should be able to hear me. Yeah, I thought so. Yeah, I'm not sure. There was another glitch. I guess I get a problem sometimes with this Stream Labs, and So apologize. I think there was a moment where you couldn't hear me, but I think I recapped what I said earlier, what I missed. I was just kind of recapping the oil market. So anyway, let's go to your questions, guys, and take a look at what you have tonight. So ACN, we can jump to that. Now, SM 1678, you're saying you're willing to pay double if you could do a deep dive into the fundamentals. Uh, is this a correction off the grand super cycle? I can do fundamentals on it, and I have a vehicle for that. So if you go to my website, here it is, ElliottWaveSage.com. Just scroll down, and I do on-demand stock analysis. It is $50, but it's worth it. And I will do a very detailed video, which I'll do for you right now, since you did give me a double super chat for this. But if you want, but I also give a fundamental analysis report, and I'll need time to do that. I just can't do that live. I would make mistake. I need time to think about it, research it. I like to look at the competitors. I like to understand it better. So it takes me time to do that. I can't do that tonight. So if you really want that, you can place that order. Anyway, so Accenture, let's take a look at what's going on. Looks like our chart played out here to some extent. We expected it to eventually break down. We never got like that whipsaw back up, so it just made a B wave, right? And then it made, looks like, a 5-wave move down here. 1, 2, 3, 4, 5, and then it rallied, and now it's making another 3-way. So it's turning into a WXY corrective move. I mean, I don't really have to look too closely at it, other than it is a grand supercycle correction. I mean, that's what it looks like to me. Now, let me go back here. Why did I have that at 5? I'm trying to think. So I've seen with TradingView ghost wicks emerge and show up and then disappear. And this may be a chart with that, because obviously I would not label that 5. It hasn't taken out 3. So I'm just checking out TradingView to see if there's a ghost wick or a wick missing, which we have. We don't see that. So we're gonna have to fix that. So I'm not sure what happened here, because obviously you can't have 5 like that. So let's take a look at the full cycle. So obviously that's your 3 right here, in here. And then this is your wave 5. And like I always say, we usually retrace the entire wave 5 on a correction. That's exactly what you're doing here. So when we look at this down here, 1, 2, 1, 2, 3, 4, 5, 1, 2. So 1, 2, and then this 1, 2, 3, 4, 5, 1, 2, 1, 2, 3, 4, 5, 1, 2, 3, 4, and then 5. So I think I'd put the 3 right here. And that's what we should do. And then you have the blow off top. So again, not sure what happened up here. And then of course this is 5 up. I don't need to label it. So it's a grand supercycle correction. We see there's your 3, that's your 3, and then there's your 4, and then there's your 5, and then your correction. See, and you take this correction is taking out everything, all the pivots. So grand supercycle. If we were trying to present a box on it, it would be in one now, but it would be a significant, obviously a large box at the bottom, which is always dangerous to go so far down. So we need to now we need to label this corrective structure. Probably some kind of ABC now. So now I would look at this as more like an ABC, 3 waves up, and then put your C here. the problem we have, unless it's 1, 2, 3, 4, 5, and it's over, and we'll check that. We'll have to go to the like a 4-hour. You see how we're erasing divergence here, but we didn't take out those levels right here, and that would be your 1, 2, 3, 4, 5. So this would be 3 of 5. So if I was trying to label this right now, right, I could I could label it 1, 2, we're down, like something like this. And then this obviously is going to go through the box. It's going to run out of room. 1, 2, and then you're in some kind of 3, 4, 5. But when you see something like this, it's more than likely going to erase divergence. So more than likely you're going to have a 1, 2, 1, 2. So box is not going to be helpful. So this is a very bad situation for this company's chart. Now, there is a lot of support here, right? Look, but you blew through it without a bounce. Okay. Now, the thing is you've gone through it before, here and here, and it always recovers, right? The swings aren't finished yet, but what I imagine is going to happen is I just can't see it going down much further than here. So I think the way I'm going to label this is going to be like this. I think this is how I label it, because I unless it has an existential crisis, like it's going to go like this thing's going bankrupt, like it's going bankrupt, right? Or something like a Lehman, and again, I don't follow it fundamentally. Maybe I do need to do a fundamental report, but this chart is acting like, I mean, let me put it this way. If this doesn't find any support here in it erases divergence and it doesn't do this, right? It should just do what I have right here. It should just stop, rally, come back, and then have a violent reaction higher, a relief rally or a major low. Boom, right? It should do that. Then if it's going to go into the abyss, right, it will happen here. And then it could just go into the abyss. But for it to just melt down, no bounce, no technical support, saved it. I mean, I think there must be something really, really terrible. Like there's a fundamental problem with this company, and I don't know. I just don't know it that well to be able to tell you exactly what it is. So I would be looking for this chart. So there's more downside. I believe you got more downside, and I would watch the 4-hour chart. And if you erase this divergence, if this keeps going lower and you take out these peaks here, it's abandoned ship. Abandoned ship. Because at that point, you'll have so much momentum to the downside. I think the next stop, I mean, where it could find a major bottom will be $40, right around this area, right around here. And that's what I would be looking for to head next. In this area, 40, 32. So if it erases divergence, my advice, abandon ship. And like I said, there's got to be a fundamental, like massive problem that, again, the insiders know, but you don't know, right? They're getting out while the getting's good. The general public doesn't know, right? Doesn't know yet. But that news seems like it's about to come out. Let's take a look, if anything. AI. So it looks like they must be given poor outlook, and that's even worse. They're even telling you if the outlook is poor and the outlook is telling you our outlook for our business is poor because of AI, they might as well just sell their company and pack up, because AI isn't going. AI is going to be around for the rest of our lives, guys. It's a life-changing thing. It's never going away. So that's a pretty, if they put out Outlook and they said AI is the reason for their they're missing guidance or whatever, they're I mean, they're not even trying to hide it. They're just telling you abandon ship. They're telling their shareholders get out. I mean, so yeah, this one definitely should have a fundamental review by me. So if you do want to get it, just as if you want to just pay half of that, because I'm doing the video already for you, and I can do the fundamental report. but you can put in the amount in the pay link. And yeah, so I think this is where we're seeing it. Uh, unless it could save itself right about here and wick back up. All right. There's really not much more to talk about. I mean, it is in the grand super. I mean, it is in grand super cycle. And remember, in Elliott wave theory, the grand supercycle correction is an existential threat to the existence of the business. That's how they define the grand supercycle wave two. When the grand supercycle ends, an existential threat has emerged that jeopardizes the existence of the business itself. And that's exactly what they're telling you. And that's why the stock is doing what it's doing. And so it now, to get it into a new wave three, it has to come up with a new dream, a new idea, a new identity, and then a new wave three could be born, and it would probably be a completely different business that existed here. And they reinvent themselves, and they avoid this existential threat and crisis, is avoid it. And that's why I always say, when the stock ends the grand super cycle, it can go to zero and bankrupt. It does not mean it. And a lot of investors, they'll hold out of hope because they've been conditioned to hold, right? Everyone's conditioned to just hold because, oh, there's always a bound. When on an individual stock, once the grand super cycle ends, there is no guarantee that it will ever come back up to the all-time highs. They can go bankrupt, zero. Okay, so they could be taken over by private equity at these lows. You don't know, like there's no guarantee. So unfortunately, we don't know the future, but I think this chart is telling me if we erase divergence and we can't get a bounce here, and we're going to hit the 47, then the market is pricing this company in to maybe be gone out of the market. All right, sad as it sounds. All right, AMC. AMC has been ended a cycle and it's been in an uptrend. Let's take a look at how it's been doing. All right, we did expect more upside. Let's see what happened with this pullback. So as you can see, I think when we were doing it, we were like, hey, if it does a flat, this would represent an opportunity. So it didn't even give you a flat. So the two was in from the beginning, and it just keeps going, right? And just like everything in the market, it's just kind of it's correcting a larger cycle. So in the stock that's doing this, you just continue to trade it on the long side, right? Looks like you have some kind of three-way move up, three-way move down. I just want to look at this one more time. See, now you have this divergence, but this would be the shortest. You can't go. See, I was thinking, could it be 1, 2, 3, 4, 5? Well, that would be the shortest, so that's not going to work. So I think we just label it like we normally would any other wave. 1, 2, and we'll just start trying to label it. 1, 2, and it looks like another 1, 2 here. A 3, a 4, 1, 2, 3, 4, 5, 1, 2, 3, 4. Put 5 there, 3 there, a 4 there, and then 1, 2, 3, 4, and a 5 there. We could put 3 there. So I think that's the label we'll go with. All right, something like that. And let me just look at this one more time. Yeah, something like that. So I'll look for this. Now, we do know sometimes in 3 waves, right, it could be corrective, right? Once this 4, there's no guarantee for a 5. It could just go back to all-time lows. But there's some clues we look for to see if that's going to happen. We haven't erased divergence yet. And so it's unlikely to do that. So in fact, it's more likely to continue to extend in 3. And this 5 is likely to erase divergence. I wouldn't be surprised if you have a 1, 2, and then a 1, 2, and another 1, 2 here. So it's squeezing. Why? Because people are trying to top tick shorts, and they're getting squeezed. And I think that's likely to continue. So yeah, so I think I wouldn't be surprised if this pushes higher, races divergence, and continues to squeeze people, because you really can't call that three in until you take out this peak. See, it's starting to do that now. See, it's starting to accelerate now. So it seems like the market wants to take this higher. All right, so this top is not in. This is not in. And I wouldn't be surprised, like I said, if it's a 1-2, 1-2, and then we're in 3 of 3 here. You're going to get an explosion higher. Where's our chart? From a chart standpoint, we've got a lot of resistance coming up at around 319, 325. Let's look at, let's really zoom out and look. Yeah, I think, see, 315, 320 should be a significant resistance. And if you can get through that, then the next large area of resistance is at $5. So 320 is here. So perhaps 3 can top at 320. But if it can get through 320, then I think it's going to 5. It's going to be a short squeeze. All right, that's really all I can say on it. I think it's just obviously it's in a bull market cycle right now. It's in a bull cycle. All right, this take two was one we looked at before. We called the grand super cycle in on this, and it looks like we have a nice connector wave. We have a final box where we got to patiently wait for, and it may take some time. This looks like 5 waves down to me. It looks like an ABC correction, right? We also know, right? See, it looks like 5 waves down, and then of course the connector wave, right? And then another leg down, right? And then that would be like a 1, a 2, something like that. Now the question is, now see, when this finishes, this could be the low, but it could also become another bounce and then another low later, like that. So tough to say. I think the next box, we could get rid of this. I was just kind of trying to point and make a point there. The next box on this would be right around 168, 149 in that area. So that's tradable. That's a buy. That's a box you can buy in this box here. You can buy this if it happens and then play the reaction. Perhaps it finishes soon, early, and can keep going. But since we never made it to the wave 4 cluster, a lot of times this bounce is going to fail again, right? Or worst case, crash right through the box, crash correction. As we can see here, we haven't broke the pivot either. So I think there is a high degree of likelihood you're going to have more downside in this instrument. And this box I think, is unlikely to be the actual low. I think it's a tradable area for a long position to get a bounce. But my gut tells me it's going to keep going down and eventually bottom in this area here. Red wire. Let's take a look at what's going on here. So right away, like I've always mentioned, you get 3 waves up, but we don't have enough. We don't see the 5, right? And this is too large for a 4. So now we need to look at, is it in a flat or something else? ABC, when you're trying to go with an ABC here, maybe we needed to go with ABC in here, ABC. So maybe the better way to label that would have been WXY. So probably here was a 3-wave move and not an ABC, not a 5-wave move. So we would just shift our label. Still expect it to go higher. And then this within here is, like I said, some kind of A, B, C. and then something like that. And then, of course, this ended up being ABC too. It just has to be. There's no other count that makes sense. W, X, Y, and now you're in X. So now the question is X done? And you need 1, 2, 3. There's your connector, 1, 2, 3. So it's probably finished or about to. See, right where it's finding support, right there. And again, it's sometimes sometimes it does that, right? It's right there. So right there. So I think this is the area where it will turn and then start to make the final move out of this mess. Plug, unfortunately, I look at this and I just can't get excited about it yet, because here we do have 5 waves up from a box here, and then it does look like 5 waves up, but the problem on the shorter cycle is it made a flat. It made a flat. And so now you're stuck in this flat. And when does it end? We just don't know. I mean, it could just keep going on. It could go all the way back down. So we just don't know, and that's why it's tough to just start randomly buying it. It does look like this first wave is over to the downside. So, I mean, if I had a bullish bias, I would say it's finished here. But it's dangerous to say that, because we've seen in these before where it can bounce and then go lower like that. So I don't know. We won't know, but it does look like this move down has ended, and it should start to make about a cycle higher. This could be that low. It could be that major low for this cycle, but there's no guarantee, and there's really no way to know until you come back and take out that B wave peak. So I think it's just one of those, it's kind of tricky. It's kind of like you have to have that leap of faith and buy it here, put your stop at 265, and know that there's a significant gap down risk potentially if this C leg wants to extend and do a double and come back down to like below $2 and try to retest this low here, which it can easily do. So I think it's kind of like 50-50, but should it come out of this? Yes, because the structure looks okay to me. It's just, when is it time? I mean, this could have bottomed, right? We do see the cycle ending, right? The downtrend ending here. This downtrend is over. This downtrend is over. So we're in a new uptrend. If we were to come back below, since we're in a new uptrend, if we come back down and break this low at 265, then it will be on the path to retest these lows. Mosaic is pretty straightforward. We had a failed cycle, and we need another swing down. Okay, Mosaic was kind of an unusual stock because it did not benefit from the energy bull market, and I think the reason was it needs sulfuric acid to make, the fertilizer it needs, and guess what? It can't get it if the Middle East is all jammed up. And so investors realized that, and they were like, "Oh crap!" and they didn't dump. So in fact, the war and the Strait of Hormuz being jammed up hurts this company. It doesn't help. You would think, oh, fertilizer's good. These guys are, no, because they need the chemicals to make it. If you don't have the chemicals to make it, you can't sell it. And that's the last thing I read about. Now I read maybe they've overcome that challenge internally, and I just need to do another fundamental look at it. But I was always thinking we would need 3 waves down, a bounce, and another 3 down. And I was looking at this probably around 16, 17 before I would start to, like, sit up at attention, like, ooh, okay, now you got my attention. Like, so I think you've got this another cycle down, and I think it makes sense if you look at our crude cycle likely going higher another cycle. So I think you've got something like that, and then when that happens, somewhere down there's the low, I suspect. And look at the resistance you're running into. See this? This is a head and shoulders continuation pattern. All this overhead supply is now resistance. See, it came up, slam, 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 slam. They can't get through it, right? So it's likely to capitulate lower. Core weave, we still stay bearish on it until we can flip 139 to invalidate the bearish view. We do, but again, we have 5 waves up. We are correct in this mini grand super cycle. So I guess there's no guarantee of a 3. It would be unusual to have a company go out of business as quick as it came. So I mean, I don't think it's going under, but it could. I guess anything's possible. But I would say it needs to take out this level. So we probably put C here. Again, if I'm just doing this, and I would put W here, make it X, and another move down in Y. So something like that is what I'm thinking. And we could take a look at the 4-hour actually. Yeah, I think we'll go with that. I think we'll go with this view. So we'll go with this view. And like I said, it's been a really tough instrument to chart. We did get some of it right early on, some of it wrong, some of it right again. I think we called this peak exactly right. And it's been tough. This one's a tough one to navigate. But I do think see, we have this lower low here. And even from here to here, it would be nice to resolve that with a capitulation flush down. Kind of almost like a crack, like down. And then it's the low. I just don't like bottoming like this. To me, is a weak bottom. A lot of people go, "Oh, it's a strong bottom. Look, it's set 4 or 5. It's one. Look at all the tests." To me, actually, it's a weak bottom because you never got like proper capitulation into this bottom. So I think we need that investors to capitulate properly, crash it down, like big, and then break these lows convincingly, and then take it out, right? So we need to, let's go to the weekly. So we want that weekly cycle to get oversold. Basically, that's what we want. We want the weekly cycle to turn oversold. Let's go back and take a look at the stochastic. You see here, we want this to come all the way down. Most stocks, the weekly cycle ebbs and flows between overbought, oversold. This was oversold here and here, but then when you made that lower low, that's what screwed up the whole thing. So we need to come back down again. I think we need to come back down again. This doesn't look impulsive at all to me. I don't see 5 waves, right? It just is a mess. So I think I'm going to been staying away from trading it. And I think I'll continue to do that. But I'll say this, if this can come back and push above one right here, then we have to call the low in. We have to. And then it's in a new cycle higher. And that's what I would be looking for. MO, let's take a look at MO. MO is Altera. Okay, yeah, Altria. All right, Altria. I'm not sure if our chart got messed up or not. Again, we definitely, I remember talking about some of these dividend paying stocks, back down here, and they all worked out really well. This is another one that did. This had a nice 5 waves up, 3 waves down. Let's take a look at where we are here. This could be a 1, 2, 3, 4, 5. Yeah, see the divergence there. So this look, I mean, just looking at it, this is what it looks like to me. Okay, and that means we would correct this wave. Now, in 5, we're not done yet though. We still have more upside. So that's what I was looking at that too. So it looks like in wave 5 we're not finished yet. So I think you'll still have more upside in wave 5. Unless it's a flat and 5 is done here. See, you can go 3, 3. So it's got a couple paths. Either 5 is done like this, it's a flat, and we're just going to crash back down to 50, or 5 needs another high with divergence on the shorter cycle. I mean, the daily here, the daily cycle, right here. See that? We need to make another high with divergence. We don't have that. So we'd have like a 1, 2, 3, 4, 5 here. So maybe something like that. So I would say it's my guess is this cycle's coming to an end soon, and then we need to correct it. Okay, that's what I think is going to happen. All right, and then so that would produce this count. So let's go. Let's update this. Something like that. So it looks like again, looks like tobacco, cigarettes is going to be making a comeback in the future. Looks like people are going to need that, I guess. For what may be coming. So anyway, so here we are, something like this. That's obviously a larger cycle. Okay, so that's what we're looking at, and that I think produces your your cup and handle, right? The cup and handle that uh, you know people want to see, right? Something like that. Again, I can draw this different ways, but you get the idea. And when this, if this does top, normally again you correct back down to the 4. So you would more than likely expect a multi-month correction, perhaps even multi-year, right? I mean, it could even take a year or two, but you're coming back down to this area here, right? And then a big breakout, big bull market, because you'll have a breakout of like looks like a 10-year chart, 10-year consolidation. So that would produce a lot of upside when this breaks out. All right, so this one, yeah, this one definitely want on your radar, right? You want this on your radar, right? Okay, let's take a look at, got a few more that have come in. BB, BlackBerry. I've seen that flying around the internet. I haven't even taken the time to think about it, but let's see if I can find it on the is it only on the TSX? It's got to be on the New York and is it on? I guess it's only on. Yeah, no, that doesn't make sense. Hold on. BlackBerry. I'm just gotta look through. I'll just type it in. All right. Well, I don't know. I guess we'll go with the TSX. What the hell? All right. So, I mean, obviously, it made some 5-wave move up. It's in a, this is a great example of, hey, the grand super cycle may never come back to the all-time highs. It looks like it made a 1, 2, and then another 1, 2, 1, 2, and then a series of 4s and 5s. So probably ended this 5-wave move here with a connector wave. It looks like it made another 5 waves and probably ended this whole cycle here at the low. We actually have to go to probably a quarterly chart. We still see a lot of bullish divergence even on the quarterly chart. So that's a warning sign that it never properly capitulated. So it's probably actually not done going down, unfortunately. So let's take a closer look at everything one more time. Here looks like a big 3-wave move up. So I think way we would label this is kind of A, B, C, and then this ABC. So we're gonna, instead of going 5 waves, we'll label it in 3 waves, and that may explain why we need another leg down. And then this right there, right? And then you get your W, your X, and your Y, right? And then you get another W, another X, and another Y. And then this off, becomes this ABC here, A, B, C, and then it looks like it did the same thing, A, B, C, like that. Yeah. And then we need another WXY. And so when this Y comes, it's probably going to erase all this divergence that you have here and really get a real capitulation. So too many people are buying the dip, unfortunately. So you're not getting that final whoosh. So that's creating trap buyers. So now it's about where are we here. I actually think there's more upside in C because it needs to be in 5 waves. So I don't think it's done going higher. I think it's got more upside. It's not done yet. Right? 1, 2, and then another 1, 2, 3, 4, 5. So you see this this has got to play out more than likely this top end process. Maybe something like that. Right? I would be looking for something like this, and then another big whoosh down. And of course, Y would do ABC. It'll be the same kind of thing, right? It would crash and spike and come back down. Okay, so that's what I think it's gonna do. BB. Hawken, thanks again. I appreciate that. And I'm glad you listen to the macro update. I know it's helpful for some people. It's helpful for me because it helps me kind of focus on the market in general versus just these charts, and helps kind of put together a bit like the picture that we really need to think about to help us understand the market a little better than we do. But and again, yes, happy Father's Day. I appreciate that. Yeah, and all the fathers out there. If it's Father's Day, hopefully you were able to do something with your families. All right, so MGY, oil and gas company. OVV, not sure, I never heard of that one. MPSCE, small cap energy ETF. Okay, a couple new things for me. All right, MGY, Magnolia Oil and Gas Corporation. Not sure if it was a SPAC or something, but okay. So we come down in 3 waves. New bull market. Let's see what we've got going on. 1, 2, 3, A, B, C, D, E. Well, we broke that low right there. So no. So we'll just put 4 here. 5, 1. Yeah, I wonder if the whole thing's done. And then this would be more than likely 1, 2, 3 down, 1, 2, 3 down, 1, 2, 3 up, and then diagonal. But 3 can't be the shortest, so we'll have to check that. Again, I'm just trying to think about how to label this wave 5. Yeah, see, 3 would be the shortest here. We'd have to put 3 there, but then that would be a 5-wave sequence up. I don't see 5 waves here, but let's look at it close. 1, 2. Yes, you only see 3. Unless I made it unless I did 1, 2, 3, 4, 5. Unless I put the 1 there and make this a flat. an ABC flat. I think I can do that. And then we can go 1, 2, 3, 4, 5. Put that 3 there, that 4 there. And then that more than likely needs one more high in 5 because I only see 3 waves up here. 1, 2, 3, 4, 5. So now let's check all our divergences and see if it matches. So right away, you see how we're peaking. We took this out right here. Now this part of the cycle, we can't use that RSI. It's no good. It's not enough data. So we'll have to use a shorter time frame. You have a peak here. That's pretty strong momentum, but it exceeds this momentum. So I think we label it bullish. We'll label that another 1, 2, right? So we have a 1, 2 here, right? And then we have another 1, 2 here. And then I think what we'll do here is call this a leading diagonal and not make it 5 waves. We'll go back to 3. So we'll go 1, 2, 3. And then 1, 2, 3 connector, 3 down, 1, 2, 3, 4, 5. I think we'll do that. We see we can't. Yeah, we just can't get this. So I'm trying to figure out, like, I don't want to go so bullish and go 1, 2, 1, 2, 1, 2, but I think that's all we have left to label it. I don't think there's any other labeling that's going to work. So I think we'll just label it the super bullish setup. Okay, this the series of 1s and 2s. So 1, 2, and then 1, 2, 1, 2, and I think we'll put 3 here. What the hell? We'll make this one 3. Okay. So I think that's what we go with. So yeah, it looks pretty strong. It looks, and it's energy, right? So are we surprised it's strong? No, it's energy. And I've never heard of it. So interesting. I'll have to look into it some because I've never heard of this company. Not sure what they're up to. Let's see. Oil and gas production. Production of oil and natural gas properties. It operates assets in the Eagle Ford Shale. Okay, so it's shale. All right. So it benefits definitely if oil can get back above, $80, $90. That's when shale really does well. So if oil, rises triple digits again, then of course this company's gonna do really well. And it's also an American, looks like American company, which is also really good. So I think we'll go with this view. Now this could even be another 1, 2 right here. Okay. Now I can't, because of the way this wave looks, I can't come up with a more bearish view right now. I mean, could it be a flat somewhere in here, like off of this peak, off of this peak? Maybe, yeah, maybe it could do that. It could just dive back down real quick to 18. But I definitely want to buy this. I would want to be a buyer of this if it could drop. But we would have to watch it. I think you either have this super bullish view or this is a flat off of this peak and it's some kind of A and then 1, 2, 3 connector, 1, 2, 3. So some kind of A, B, and then we make a C flat. So that's the other possibility is if we make that C flat, we come back down right about to 18. And then, of course, with flats, your V bottom usually, and then you come out. If we did a flat, I'd definitely be interested in buying it at this area of support. And this should be massive support. Look at that. I mean, this should have massive technical support right here. So, all right. OVV, again, let's see. This looks like another energy play. All right. And we just assume, that's the peak, of course. And now we're in we're coming out of this bear market that's been in for a long time, like most of energy. Now, question is, let's see here. 1, 2, 3 connector. 1, 2, 3. So that's your low, and then you're coming out. So let's take a look at what we have here. We did take this peak out. That's significant. Taking that peak out, that is now activated a whole nother leg higher. No matter what happens here, even if they want to punish the chasers, right, and do a flat. Obviously 5 waves. Now, what the problem I have here is your peak in 3 is here, so this is extended 5th wave right here. Typically, you correct that type of extension, and it never did yet, right? Right, we have a 5-wave move that looks like this. So now the question is this going to do a flat here and come back down to 19 and correct this properly? Or is it that bullish and it's done? What again, and that's the question. And you see, you look at this, it only looks like 3 waves up. All right, let's go to the monthly view. We did erase divergence. You know, looking at that, it looked like 3 waves. We'll probably do the labeling, but you see, we actually have a little bit of divergence. It's hard to probably see it, but there's a little divergence there. There's divergence on that peak. So this could be 5 waves off the low. So I think we would put that 2 in. We would put that 2 there, and then we would label this. Let's just see if the label matches what we were seeing here. We have a 1, 2, 3, 4, 5, then 1, 2. And I usually hate some of these wave 3s. We can barely get to see the subdivisions. It takes like eagle eyes to do that. So I'll have to be very careful trying to label it. Again, I'm just going to try to see if I can label this. See if I can make this a 5 or not. Because looking at it, wouldn't look like 5 waves, but the RSI is telling us that perhaps it is. 1, 2. Yeah, it's 5. So it is 5 waves. All right, so we would call that 5 waves off the low here. And then connector wave there. So we could have a box. We would put a buy at 51.14. I mean, it could have truncated on Thursday. We'll know soon enough. A lot of energy. There was a few energy in boxes on Thursday, but many were short of boxes. So take it for what it is. So again, I think we look at this as like 1, 2, and then another 1, 2. Right. And then this would be 1, 2, and we come out. We'll put this as primary. Okay, so I think this is kind of the view. It may still go into the box as a buy. Obviously, there's a lot of support here on the chart, right around here, this area, maybe a little bit higher, right about in this area. So there's a lot of support at 49, and then even more right around 43, but that would be below the box. It could still go through that, but you would want to see it really, if you really want to get this bullish reaction, you don't want it to go too deep, because if it goes any deeper, then maybe we are in a flat, we are off by our count is off. And if it's in a flat, then it will head back down uh, to 29, but then it would likely come back to this wave 4 at 21. So you definitely don't want to open your stop up on it. So this is, again, energy, development of oil and natural gas. This operates in Canada and US. So it's kind of got two paths. So we'll keep an eye on that one. All right, and then this small cap energy ETF. Again, looks like you've got 3 waves down. 1, 2, 3, 1, 2, 3. So we won't overthink it. 1, 2, 3, 4, 5. So we'll just call this again 1, 2, uh, and we're trying to come out of a massive correction. And again, we'll go to the weekly cycle and take a look. Divergence there, likely impulsive, looks impulsive. And then we could try to, just 1, 2, 3, 4, 5. It almost looks like the chart we just labeled, right? Look, see this high, took out that high, 3 waves down. This one was an easy buy. If I knew about it, I would have been definitely telling our members, look, right there. I mean, that was an easy buy. Look, that's where the box would have been right there. Look at the reaction. And this one did almost get back to the 4. So this one did have a proper correction, right? This had a proper correction. This is why you got to be bullish energy, guys. Whether your personal bias, accepts it or not. I mean, these charts are very bullish, guys. Look, a higher high. You've got textbook box, vertical breakout. These look like 5 waves off these boxes, and they're just making these minor corrections now, right? That's all they're doing. And just making these minor corrections, and they should just continue higher. Okay. And like I said, they may go higher even if the war ends, because you need to rebuild your energy stocks all over the world. Supposedly AI demand is insatiable, so they're building data centers that need energy. And if the Fed is lying and they're going to lower rates, the consumer is going to be spending money, and everyone has jobs. And so, I mean, that's bullish for energy. It does. So this does not mean the war. I mean, it could mean the war, World War III in the Middle East, but it may not be. It could be also the economy is just strong, and we need energy, and these guys are going to be printing money because they're going to be looked at like I said, rebuild all those energy stores. All right, this box here would be at 53.61. Stop at 49. It looks like stop at 49 right there. So this is an ETF box. Always like ETF boxes because they tend to drive the market behavior more than an individual stock. So here's another box. So we'll keep an eye on that one. And again, look, see, this was resistance. Look, this again, I'm just drawing it through a majority of the wicks here, right? Back to here. This was resistance. Here, collapse, 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 collapse. It finally flipped it, and now it's just back testing it as support, right? And once it back tests its support, boom, it's off to the race. This is one of the best. This is usually the best time to buy on a breakout and a back test of support. You're not chasing it. So, and then if the breakout fails, okay, step aside. Then it's got to be a flat. And if it's a flat, we step aside. Okay, you lose a little money, no big deal. And then let the flat play out. We come back down, and guess what? When the flat's finished, it V bottoms and it comes back out. That's what they usually do, because you have the higher high here. So one way or another, this is happening. Energy is going to be higher in the years to come. And again, it may be for the wrong reasons or the right reasons, but that's the bull market I think you want to be in, right? Be looking forward to. Okay, that's the bull market you need to be. And now this is the time, these pullbacks is the time to get excited about it, okay? And not get all upset. So this is a good example right here. And hey, if it stops you out, it's going to do this flat. Let it do the flat. And then you'll make a killing on these energy flat, because if this does a flat, they all are going to do flats, and energy is going to be another massive opportunity there. One or the other. Okay. Next question is First Majestic and Ford. Okay, so First Majestic, to understand First Majestic, we're going to need to look at SIL and SILJ. Let's take a look here. Yeah, it's strange. All right, First Majestic. Okay. Hold on one second. Yeah, I want to make sure I brought these up on the right exchange. NYSE, NYSE. Okay, AG. All right, so AG, looking at a bigger double correction. Here we have a lower low. So the next area, and again, there's your wave 4, right? We talk about that sometimes. Now, what we didn't know is how deep this was going to go, because this could have become, on the larger cycle, again, we have this 1, 2. We could have made a 3 and a 4 here, right? And started, again, it would have been like a huge lead-in diagonal off of the grand super cycle. But since it's going so deep, it's going to make a 1, 2, 1, 2. So we have three waves. We have a connector. So I think we need another 3 waves down. Okay. So I think it's not ready yet, although it's in the middle area. So I believe I think the best thing to do is just be patient with it and wait. Silver can do a couple things right now. It could bounce further, right, and prolong the connector wave, or it could just capitulate rapidly, right, like I have here. So market's either going to do it's going to do what I have shown here, and we're going to head down to the $10 level, and from a chart support standpoint, could go as low as 851. Okay, so that's kind of the area, and we would need another 3 waves down. But I can't rule out like a bigger connector, right? Now it could also do this. See here, A, B, and we could come back up in C. You see that? And then X finds resistance at 27.28, and then it makes this move later. Obviously, the box would be higher. So that's the problem with the middle area. We just don't know how it will develop exactly. If it takes the direct path down, there's our plan. This is our roadmap. If it wants to come higher and take back out this peak at 20 bucks, then I think it's going to open up the whipsaw, the short squeeze, and I wouldn't be surprised if it hits that $28 and then fails and comes back down later. And then it's just going to be in this messy middle area. And the thing is, SIL, the ETF, is also a clue, because when SIL also has this, looks like SIL here is in a W, A, B, C, and then a connector, and it needs another 3 swings down into this box. So there's your connector. So same thing, 63. So I think these are just going to need time. So I would just keep it on your watch list. I don't like the structure anymore with the lower low. Now, we have seen once in a while extreme truncations where it's essentially a stop loss raid and the 2's in. I don't have any sign that that's going to happen yet in the market. Okay, that would take the dollar index to have a complete 180, right? So if we see a sign like that, that would mean the dollar index had a false breakout, right? What it means is none of this is going to happen that I have shown. It basically has come out, and then it's going to be like the Fed chief's going to say, "Oh yeah, my bad. We're not tightening. We're going to be lowering rates, guys." Boom. Okay, sorry about that. That would be a truncation in silver. Can it happen? I guess anything's possible, but it's not likely. if we saw something like that happen where we see a sharp move down back into this area that was, think about it, this was major resistance. Look at this. Rejection, 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 rejection. We now have flipped it. Okay. If it falls back under, then it can't, how's it ever going to come back up? It won't. But it may backtest it as support, and then like we just saw, backtest it, and then it could go, that's gonna hurt silver bad. This is not good for silver and gold. This is gonna put those miners lower. So we have to let this dollar cycle play out. And when it's finished, then those metals will be in areas to buy them again, once again. All right. So I think that's really all we can say on Majestic. Now Ford, we were getting excited about Ford. Ford was trying to make some deals with Trump to build defense, or his rumors that they're going to build, military equipment, I guess, or to help restock the army or military. But then there was also, they said they're going to get into business of energy storage. Now that's interesting. So the chart on Ford looks like this. It could be your next Intel. I do think it is. It will be a future Intel. You'll wake up and one day it'll be at like $70 and you won't know why. But we have a massive 1, 2, right? The 1990 collapse, the Ford Explorer, Firestone tire debacle, and the whole, Ford just couldn't get out. Then the financial crisis, and Ford sucked back here. And then they're slowly doing better. They're making cars people actually want now. I know I own a Ford. I mean, I own a Mustang. I like it. I mean, it's good that they're making cars that people, want to buy again. And I do like Ford. So I'm a contributor to, revenue for this company. So I'm helping them out. I'm helping the shareholders out. And guys, I look at this. We were hoping the 2 was done and we're ready to pump this thing, but it looks like it's in a flat. So it's in a flat. So unfortunately, we got to wait. But this could be a tremendous opportunity in the flat, as you know. So if it's jammed up in this flat, I mean, it has a lower low even on the shorter cycle right here. So this is a what I call opportunity, right? Because this right here, 11, $10, right? This box right here is the opportunity right here. All right, get rid of that. This is distraction. That's the box. Okay, and I mean, we can extend it even lower just to cover, but that's the trend line at 10. So there's your opportunity. It looks like some kind of flat. And what's at stake is if this fails, well, guess what? What does that mean? If that low fails, if that 4 fails, guess what? We only have 3 waves up. Then we have 3 waves down, and then 3 waves up. So if that 4 fails, guess what that means? It means it's going to break this low. And what was this low? I mean, again, what was it? $1? I mean, so that means what for some mean there's, again, unless there's something we don't know. If it breaks this low, you're going to have a massive correction, a double correction. There's no other count that will work. So again, it's like I call it backing into the low. Basically, if you're not buying it at 10, you're betting at Ford, basically going under somehow, going to zero, and needing a government bailout once again at $1. So to me, I think that's highly unlikely. So I think this is a rare opportunity happening here, and they're just punishing the chasers. That's all. So I think this will come out now. Once we get 5, right? Of course, there'll be another big pullback like this, likely back down to the 4. So unfortunately, that, and then when this whole thing finishes, then it could have the Intel moment the shareholders have been dreaming about, where it just goes vertical. So that's the idea. Now there is a possible count where it's 1, 2, 1, 2, 1, 2. If it's that count, well, then it will just go vertical from here. So, but even if we pull back, it's likely to pull back about to this $10 area. So that's why this area here is such a great area to accumulate it for the long term holder, this box, because whether you get the 1-2-1-2 you pump now, or you buy some, sell some, buy some more, and you just have to wait it out, then the chart plays out. Okay, this chart plays out, and again, it's not perfect, the channel, but I'm trying to just give like a visual. And that's the thing. I usually just like to draw these through a majority of the wicks. I try not to get too worked up about precision, and it usually plays out okay for me. Like, because if I spend a lot of time trying to be drawing charts, I won't be able to go through these. So anyway, this is what we see in Ford. Okay, and then yeah, it will come out of this mess and have a good future ahead of it. Okay, so then LC123, your question is C3AI. Yeah, C3AI. Let's take a look at C3AI. That is, I think, needs a bigger look. It needs a short squeeze. Okay, it is not. It's one that I think it's a highly shorted stock. In fact, I'm going to check the open interest in a minute. Okay, so this C3AI, this cycle's over. Okay, this cycle's over. So we're in a new, where this bounce is correcting a cycle, right? It's correcting, I think, the whole decline. If I can do this right. See, whole decline. So it's correcting the whole decline. So you have to either think this whole decline was corrected with this pathetic little bounce. And if this is the case, if this is all it could generate, then this is going bankrupt. It's going to zero. It's likely it's got at least another swing higher. I mean, at least, like, I think, especially with all the open short interest. So let me check the short interest on this real quick and see how much open short interest is on this stock. Open, let's see here. And this is it has 45% of the public float is shorted. Days to cover 8.7 days. So it's pretty high. I mean, it's not like GameStop 2021 high, but it's high. So there's shorts to be squeezed on this. And I think that will happen. So now looking at this, it looks like, again, 1, 2, and then 3, 1, 2, 3, 4, 5. So 1, 2, 3, connector, 1, 2, 3. So it's a corrective bounce. And then you have another connector. Okay. See, there it is, no divergence. So you have some kind of a corrective bounce. So we'll call this W. And then we're in some kind of connector. Hold on one second. 1, 2, 3. Yeah, what happened here? You see, I think sometimes TradingView, see here, the wick, there's no wick. See? And then if I go to the daily view, TradingView adds more data. So which one do I go with? I think we'll go with this one. So that's what it's saying. TradingView's got some glitches with its pricing sometimes. Okay, so that's why it's tough. See, look at this on the 4 hour. You see that wick, ghost wick to 1292. The daily, it doesn't exist there. It's gone. It's gone. So that makes charting a little difficult. I think we'll go with the higher. Maybe we'll go with like a higher time frame. Let's go with the weekly cycle, and just go with that. So we'll use the weekly cycle. We'll just use that. So that makes it a little different. 1, 2, 3. So it's the same thing though. 3, and then a connector wave. See this area? This was resistance, should be support. So that the trade idea is to buy it at like not $10, 977, and play this as support to try to play Y. And this kind of like a three-wave move down. So let's take a look. Box would be right through it. So this would mean like, okay, we come through and wick back up. So we don't want to go deep, right? So this would be 945, $9. You wouldn't want to go deep into this area, but if it were to come into this area and wick back through it, that would be ideal. And then you would get a massive short squeeze. If not, the X is already done here, and it's about to do that. It's about to start the process here. So I just don't know. Also, X could turn into this as well, right? Like that. Make a triangle. So we just don't know yet, but I think again, basically in this general area, hold on here. Basically in this general area would be a good area to take speculative long positions to try to play for the short squeeze. Because to me, I just don't believe it could end here. But this is not Elliott Wave or any. This is just trading. I'm just telling you as a trader what I think. I think this will get tested as support, and then you can buy this area and then play and try to play it and see if you can get that reaction. And if you don't see it happening, just dump it. Just dump it. And if you see it start to turn, then put a run. Put a stop loss on it that back at the where the low where it start to move higher. But I think that's kind of how I would play this, because it seems like it needs a short squeeze that hasn't happened yet. Okay, I think it does. And we sensed this with some of these other ones our elite members have watched and have played out, like we have seen play out. I think Xerox was one similar, but Xerox gave us a clean setup. This is not clean. Now, if it came into this box, that would be a little better, but Xerox gave us 5 waves off the low. Unfortunately, this one did not. All right. ALOY, let's take a look at that. Realloys, okay, haven't heard of that before. FRMI, Fermi. I think we've done Fermi before in the past. Let's take a look here. So again, looking at it from this standpoint, we just try to find where the swing low is, which is down here, and then we kind of just label it from that point onward. Weekly cycle, a lot of divergence here. Looks like it's probably a flat from this peak, but we'll label it in a minute. And again, here you have divergence. So clearly you had 5 waves up here. So that was the clue that you were going to go into a new bull market, right? 1, and then it looks like you have a 2 here, but I'll have to look a little closer. Nope, 2 is there. Some kind of A, B, C. And then you come out 1, 2, 1, 2, 1, 2, 3, 4, 5, 4, 5. So yeah, let me go back, step back and label it. Too many 4s and 5s. I can't do it by my eyeball here. We'll have to do it like this. 1, 2, then 1, 2, 1, 2, 1, 2. Let's see here. 3, 4, 5. And then we overlap this wave. So we're not getting clean separation. 1, 2. 1, 2, 3, 4, 5. So there's another 5 there. 3, 4, 5, 3, 4, and that's your other 5. And I believe, let's take a look here. There's your 3. There's your 3. There's your 5. All right. So we didn't get a good separation in the wave 3, but since it's kind of the first wave off the low, we could accept that. And leading diagonals tend to do that. I mean, I can accept it. If it was in the middle of the 3 of 3, that wouldn't be acceptable. Uh, again, I mean, did it really go up to $70? Again, TradingView. Again, what we too many ghost wicks on TradingView these days. Okay, so here we have 5 waves up. Problem we always see on these kind of structures is sometimes we get these big connector waves where you get like an A, B, and C, and then it goes all the way to new lows. That's the problem with something like this. It could easily do that. Now, you see how we bottom though? We did not bottom with divergence. So this one may not do that. Okay, it may not. Typically, the ones that do that don't bottom with the bullish divergence. So I think the best way to what we can assume from here, again, wherever, we'll just assume that's the top as a ghost wick. 1, 2, 3. Yeah, so I think we would call that the low, and now it's trying to make a new cycle from that low. And it corrected the whole cycle. So I think we would again, it's a very bullish interpretation of it, but I think it's the only one I can see right now. We put that 2 in, we assume it moves higher, and then as long as this low holds at 746, which see it retraced basically back to the 4 wave, then it would start a new cycle higher. We go 1, 2, right, like that. And then we have another 1, 2. Right? And then we have another 1, 2, 1, 2, 3, 4, 5, 3, 4, 5, 3, 4, 1, 2, 3, 4, 5 here. And we're about to accelerate. See, we're accelerating. But see how it's holding the bull market? See, it's holding that bull market trend. So big decision. I think it's about to erase divergence and get that extension we're looking for. So we're gonna go with that view and see what happens in the coming days if you can get that explosion out of this. And I think that's just a ghost wick. I don't think that's real price action. So I think that's what I would look for. And as long as these lows hold, we would expect more upside. Now we can't rule out, again, since it is 5, like we could correct deeper. We never did make it back to the 4, but you see the acceleration is happening. See, it already happened. Yeah, I think this is going to accelerate through. All right. What do these guys do? These guys do, they're engaged in rebuilding of the domestic supply chain resilience for rare earth elements and magnets, involved in recycling, mining, oxide production, alloying, and metal manufacturing. Company is headquartered in Boca Raton. Maybe we should go down there and check them out. Yeah, maybe I'll drive down there and see what these guys are up to. But the chart looks pretty good. Looks like it's going parabolic even. See that? So yeah, we'll keep an eye on that one. All right, FR for me. All right, so what do we have? So right away, it's doing the whipsaw around. So this was kind of a straight continuation. So it's going to build out a larger connector wave to punish the bears who chased, right? So it's going to whipsaw around and likely come back down again later. So normally we would see more upside with this kind of structure because it's got to make 5 waves up, and usually it comes back up to around this area. Let's take a look what we have going on here. So again, we would just put that here, A, B, 1, 2, 3, 4, 5. So A, B, C, and then we just kind of have to count 5 waves out of this thing, out of this. 1, 2, and then 1, 2, 1, 2, 3. That I don't like that. Let's look. So it looks like we're moving. Yeah, we must. Wonder if we're gonna run in flat here or something. Let's look here. Yeah, see this corrected this dip corrected this whole thing. Very typical of a run in flat. So we would have to put that 2 here. Right. And then A, B, C. Problem is I see 1, 2, unless the 4 and 5 is just buried in this wave and we just can't see it. I mean, yeah, it is. It's just buried. There's your 4 and 5 right there. So you just couldn't see it. So we would call this a run in flat. Obviously, we're in the third wave. 1, 2. Then it looks like a 1, 2, 3, 4. 1, 2, 3, 4. Probably put that like that. Let's see if the divergence is there. No divergence. So we made another 1, 2 up in this area. So let's extend it. See, short squeeze. It's destroying the bears who chased it. And the market loves to do these moves. Everyone shorted it down in the hole, and they're all getting blown up. And that can happen. That can happen to people. It happens to the bulls who chase at the top, and they get caught up in flats. It's kind of the same idea. So I think we would label this again. It's hard to see the subdivisions 1, 2 because it's so illiquid, but I'm trying to do the best I can. 1, 2. Well, it's not that illiquid. It's just hard to see it. The price action doesn't. It's not volatile. 1, 2. So maybe this. Okay, maybe something like that. So I think it's got more. Obviously, it's got I think more upside. And but I think when it's all said and done, it does come back down again when this is finally over. Like I said, it could see even 15 this close, $15. Yeah, and but I do think it did not pop bottom. It did not capitulate properly, so it's highly likely to take another leg down whenever it's finished. Okay, what is this? Oh, it's a REIT. Yeah, no wonder. Yeah, REITs to me aren't that good on the longer chart right now. Like they may some of them are breaking out, and I do think there's like this tug of war between is interest rates going to fall, but we all know longer term rates are going to go much higher, and those are going to kill REITs. Those kill REITs, right? Higher rates. So Unify has been great for me. I can't remember. Oh yeah, I did. I definitely was a fan of Unify. It's been a long time. We can do a rewind and take a look at that. See how that's doing. It's a name I haven't looked at in a while. Yeah, we gave I think we gave some boxes on this a long time ago. Let me see if I remember it. Yeah, I think we were talking about it down here. Even lower. I'm trying to remember. I think maybe even yeah, I think we had it down in this area, but it's been a while. But as you can see, again, grand super cycle, guys. If this keeps going, it look, it's going to be years of gain, right? This is one that will be in a bull market for a long time. The best is still yet to come. So even if you are listening and don't own it, there could be an opportunity to buy it, right? It could still be an opportunity to buy it. Wonder if that would be too short to be 3. This 3 can't be the shortest, so I don't think we would label this as a 1 2 1 2 1 2 then. All right. If I was labeling it, go 1 2 1 2 1 2. And that's why it wicked back up, right? You see, poof, back up. So anyway, all right, I think I covered everyone's questions. We could take a look real quick tonight. How's the market doing? Like I said, it's going to be very erratic. The futures making this lower low has opened up this more downside is likely, but as you know, the market does love to, you know, do the whipsaw where you come up, come down, come back up, and then come back down. So it could easily do that with just a couple tweets at, you know, 7 a.m. saying everything is all hunky-dory once again. But if it takes the direct path, we would head down probably another, looks like 600, 700 points from where we are on the Dow. So it would be negative 700. So it'd be a bad day in the market. Oil, how's oil doing? Okay, but like I said, from an Elliott wave count, it would be nice to make that final swing down, but it doesn't have to. Obviously, something must have been dropped. News must have just come out that said everything's okay, right? Because it's like we read on the news, like, oh my goodness, they're not, you know, Iran delegation left Switzerland because of Trump's threats that they made, and then Lebanon, there's still Israel's still in Lebanon, so they left, and then they said J.D. Vance was looking like clueless there. They were totally like dissing him, and it just was like a big mess. And so the market sells off, but now you read it, it's like, no, everything's okay actually. So it's like, do you believe what your eyes see? Do you believe what the headlines say? But what we all know is, what I think is, there is no going back to normal. There is no going back to what it used to be, right? They want it to go back to the way it used to be, but Iran now has discovered it has all this leverage and it's going to use it. And it will never not use it again unless you take it away from them. And guess what? That means military. So we know that that's unlikely. So this is a new normal. So the world has to figure out what the new equilibrium, homostasia, you know, like dynamics going to be. And that's what the market and the world's trying to figure out politically, diplomatically. What is the new normal? And trying to like establish that. And so we don't know, but it's definitely not like it will never go back to the way it was unless, you know, Trump's going to go in there and take it. And we know it's not. I don't think it's possible without massive troop deployment and massive casualties, like Vietnam type style casualty, and I just don't see it. So I think the world's just going to have to accept this situation. And you're like, why didn't Iran ever do this in the past? And they said, well, it's because more moderates were in charge and they killed the moderates, and then the hardliners decided to flex. And I don't know if that's true, but that's what I've read. And so that's a backfire. So the decapitation did not work, and now you have this. And so the markets wants it to go back to the way it was. I think US wants it to go back, but it's never going back to the way it was. I think Iran realizes it's got a lot of power now, and it's going to flex it, and it's going to use that straight. Anytime they feel slighted or they want something, they're going to use this straight as their card to play until the world can take it away, either militarily or there's enough oil comes online, like we pump up our capacity on, you know, the America producers get their act together and start pumping and drilling again. They're so conservative on drilling because they got blown up in the you know, the late 80s and stuff. So they got so, you know, they need to get drilling again, get more capacity. And if they do that, then they can make up the difference eventually. But that's years away. So there's only two solutions, right? So anyway, all right, guys, that's all I have tonight. So I'll go ahead and wrap it up. Can Elliott Wave be applied to small cap moves? I think Elliott Wave is less accurate for not the size of the stock, but the cycle, I think it's more accurate for the larger degree cycle. It's more accurate on the weekly time frame, monthly, daily, even 4 hour. But once you get to like 45, 15 minute, and then some people I know online use it at the 5 minute, 1 minute, highly, it's not that accurate. It's theoretically it's supposed to work. It's supposed to be as resilient no matter the time frame. But I think if you do like the amount of different combinations and permutations, it like increases exponentially as you go down in shorter time cycles. So just the opportunity for error increases dramatically the shorter the time frame. So Elliott wave theory works really well on the larger time frames. Okay, that's where I think it can really help you. But what the one thing it doesn't do, even on the larger time frames, is predict extensions, right? Where you think you have a 5 and then it extends and your wave 3 keeps going larger and larger, and that's why the people who have been predicting the top of the indices since 2017 have just been wrong, because the market just keeps extending and extending, and it can do that, I mean, in theory forever, but we know in practicality it won't. Eventually it won't. But I mean, that's the flaw, and so we use RSI to help overcome that flaw. But even then, it's still not foolproof. We still can't predict the future and know everything. So if someone could figure out how to predict that extension versus not, then you would have a dramatic edge in the market. That's the huge edge. And also being able to predict a flat. So if you can figure out a way to predict a flat and then predict an extension where wave 5 is not a wave 5, you then Elliott wave would become like, you become millionaire. You would own the marketplace. That's the flaw. But that's the flaw now. And that's what really makes it where you got to really be careful risk management, is because these waves can extend, and the double correction also is always possible. So, but basically, shorter the time frame is no good. And then I think with the smaller stocks also, you need like, they need to be liquid. You need to have a lot of trades, right? You need to have data. If you can't even look at it on TradingView because you can't even see the chart because there's no trade, it's so liquid, that's not going to be helpful either. So anyway. All right. Well, I think I covered everything, guys. Thanks again for tonight, and good luck. And we'll see what happens tomorrow. We have a good week coming up. PCE later in the week, Micron's earnings, and of course the drama